Today, we continue our series on breaking down the function of a note and mortgage in the mortgage industry. With me today is my longtime partner, Matt Mitchell. Matt, please tell the audience a little bit about yourself.
Thanks, Marty. As Marty said, my name is Matt Mitchell. I'm an attorney in Maddin Hauser's financial services group. Been with the firm for many years, and during that time, I've been privileged to handle a wide variety of matters for both mortgage servicers and lenders, and I'm excited to be here speaking with all of you today.
So, Matt, in some of our prior episodes, we've had an overview discussion about promissory note versus mortgage, borrower versus lender, mortgagee versus mortgagor, all of these terms and roles that help these notes and mortgages function. There's another term that we often hear in the mortgage industry called Mortgage Electronic Registration Systems, Inc., or MERS. What the heck is MERS, and what role does it play in a mortgage transaction?
That's a great question, Marty, and one that a lot of our clients have. So MERS stands for Mortgage Electronic Registration Systems, Inc., which is in essence a privately owned electronic registry that serves the financial industry by tracking changes of ownership of notes or debt, as well as the assignment of servicing rights.
Matt, thank you for kind of giving us just the general basic definition of MERS, but can you drill down a little bit in terms of what the purpose or function of MERS is in the mortgage industry?
Marty, MERS was created as a service to the financial industry to solve a problem in which transfers of loans and mortgages became a very cumbersome and manual process. Let me explain what that means. Notes and mortgages are often thought of together, but one is a debt instrument and one is security for the debt that often encumbers real property. Now, where MERS fits into this is notes and mortgages are to be effectively, I'll use the term transferred. That's done in slightly different ways. When you have a note, a debt, let's say you sign a promissory note and I'm your lender, I can freely assign that note to a third party without your consent and without the need to record something in the public records that would necessarily reflect that transaction. So if I would typically do that by putting a stamp on a note called an endorsement and delivering possession to the third party. Now, doing that in and of itself doesn't tell the world that I also hold title to the mortgage. That in essence, this new party, this third party, has become mortgagee and is the party that if there's a default has the right to enforce the power of sale. That is done in order to perfect the third party's right by recording what's called an assignment of mortgage in the land records for the county where the real property is located.
So, Matt, just so that our audience understands, the promissory note can be transferred or assigned between lenders as long as the assignee complies with the Uniform Commercial Code, the UCC. Those assignments are invisible to the world. Is that accurate?
Yes, generally so. Now, the borrower may be entitled to notice, but nothing is recorded in the public record to tell the world.
But on the converse, we have a mortgage, which is an interest in real property. And the mortgage, as you've already noted, that gets recorded generally with the Register of Deeds or Recorder of Deeds in the county in which the property is located. There is a public record of who the mortgagee is for that property. Is that accurate?
That's correct. Absolutely.
So if we transfer a mortgage as mortgagee from mortgagee A to mortgagee B, typically we would have to record another document with the Register or Recorder of Deeds to show that there had been a transfer of that mortgage. Is that accurate?
That's right, Marty. When the debt goes, And, we live in a sophisticated financial world now where financial institutions may be selling the same debt multiple times. So absent MERS, each of those transfers would require the separate preparation and recording of an assignment of mortgage. And MERS was created to solve that problem.
So then under what I will call a MERS mortgage, what role does MERS play under a MERS mortgage, and how does it actually make those transfers of mortgage between mortgagee A and mortgagee B easier?
So MERS will be listed in the security instrument as the mortgagee of record, as nominee for the lender and the lender's successors and assigns. The successors and assigns part is important because even though you may have financial institution A that's the original lender and MERS is holding on behalf of, if financial institution A sells the loan and transfers to financial institution B and delivers possession of the debt, transfers the note, MERS remains the mortgagee of record on behalf of now financial institution B, and that eliminates the need to record a separate assignment each time these loans are sold.
So in this discussion, you used the term that we've not heard before in our series, the term nominee, MERS as nominee for lender and lender successors and assigns. What's a nominee?
A nominee is in essence an agent, but it's a very limited agency. MERS is holding the mortgage on behalf of the lender, but MERS doesn't claim or have any underlying equitable interest in the note. MERS has truly been appointed by lenders within its system, the lenders that participate in the MERS system, to serve that function to make transfers of the debt and servicing rights easier by eliminating the need for a separate document to be filed in the public record.
So if I'm a member of MERS and I'm mortgagee A and I transfer the mortgage to mortgagee B and there's no assignment recorded with the register or recorder of deeds, what does MERS do to acknowledge that transfer?
That's where the electronic registry comes in. There's a notation, there's an entry of the transfer of the debt, and if the transfer of the debt involves a transfer of servicing rights, of the transfer of servicing rights within the MERS system, so it's preserved in essence for posterity and compliance reasons, and financial institutions don't have to rely on creating that document in the public record and noting their own records that that's been done. That was a very manual and, frankly, could be a very error-ridden process.
So we've talked a lot about the MERS system. Is every mortgage lender in the United States a member of the MERS system?
Not every member, but I would say, at least according to MERS, a majority of lenders, I think it's about 2/3 of residential mortgage originators, do participate in the MERS system. But there's no requirement that they do so, and financial institutions are free to either participate or not participate.